The idea behind ThinCats came from a meeting of business angels. I've been making co-investments with business angels with my venture capital fund for the last 7 years. And one of the business angels came up to me at a coffee break and said he had a problem. He was fed up of making small equity investments and potentially losing his money or not knowing for 7 years whether he was going to get it back or not. But he had a substantial problem. He had an income each year which he needed to invest, and if he put it in the bank he couldn't get any significant interest. So he was looking for companies to lend to and asked me if I knew any. I asked him how much he was thinking of lending, and he said up to £1 million a year. And I thought that's an interesting opportunity. So I asked the other business angels at the same meeting over lunch whether or not they would be interested in a similar scheme. And they all seemed very enthusiastic. Some of them said they knew friends who would be interested in lending but weren't interested in equity. One of them said his pension fund would be interested. And the person sitting next to me said he had a software company that was capable of writing the software to build an online auction system for lending to businesses. So that's where it became born. We called it the Business Loan Network, and I went home thinking about how to write a business plan to set this scheme up. And on the way home, I was listening to the radio, and there was an item on about fat cat bankers, and I thought that's exactly what we don't want to be. So that's where thincats.com came from. Thincats.com is an online marketplace for secured business loans so that private investors can lend to businesses directly, bypassing the banks and cutting out their charges. So both parties get a better deal. The lender gets a better rate of interest and the borrower gets a deal they might not otherwise get. This new type of investment is so attractive because it produces a good rate of interest and it's a regular income and it's predictable. And it doesn't go up and down with the vagaries of the financial markets. There are two key things that make ThinCats different. The first is we always look for security, to the same sort of standard as a bank would expect. And the second is we behave like a traditional bank manager. We get to know the client. We have a network of sponsors who get to know the clients, and they have to put their reputation on the line if the deal is going to be featured on the website.
I qualified as a chartered accountant in 1990 and then moved into corporate finance, specialising in raising finance for clients for acquisitions, management buyouts. In 2000, I set up a commercial finance brokerage, Sterling Capital Reserve, with the idea of accessing niche lenders for my clients that couldn't get money from mainstream banks. I became a ThinCats sponsor in the summer of 2010. The rationale behind that was because ThinCats are offering a very unique offering in today's marketplace for finance. I wanted to offer that product to my clients, either as a standalone product or to blend it with alternative sources of finance to get the financial solution for the client. A sponsor has to take inquiries for ThinCats loans and produce an information memorandum in order to present the deal to investors. We effectively adopt the deal, so therefore we're putting our brand and our reputation on the line. So we need to ensure that it's a quality deal, it's got the ability to repay the debt, and there is security within the deal if it should go wrong. We see a complete cross-section of deals from the marketplace, from working capital requirements, development finance requirements, people want to buy companies, refinance, restructure their debt. But we've got to be careful about the deals that we take on because we only put up to investors around 1 in 10 deals. So we need to make sure the deals are of quality. We get deals from a number of sources. Some come in direct from the internet or direct referrals. Some come from the professionals in the local community. But we're seeing an increasing number of deals at the moment coming from bank managers. These are usually deals where the bank manager would like to do the deal, but credit policy says no for whatever reason. More and more deals are coming from banks, and we expect that flow to continue as they adhere to Project Merlin, where the banks are encouraged to refer deals out and signpost alternative sources of finance for declines of credit. I don't see the banks seeing us as competition at all. I see the banks welcoming this product to the marketplace because it means that we can finance their clients when they can't, which means that they do not lose the client to another bank.
The target investors for ThinCats are experienced managers of investment portfolios and their pension funds. But we're very conscious of a lot of investors out there who don't have the time or the expertise to make their own investment decisions. And so we're working with Invitec on ThinCats bonds, which provides a management service so that they don't have to make their own decisions.
The ThinCats bonds help address the Chancellor's concerns that there is not enough funding available to the small and medium-sized enterprises in the UK. At the same time, There are private investors, be they individuals or their pension funds or corporates with funds on deposit, who are looking to earn a little bit more interest than they currently are in the current climate. Finally, as we all know, young companies, private companies, SMEs need additional funding to help them grow. The banks maybe are not in a position to provide as much as they can at the present point in time, and the Thin Cats bonds will help address their needs. Those that currently trade on the Thin Cats platform are basically experienced investors. We are looking for the individual, his pension fund, who are not a sophisticated investor, who do not have the time to read the sponsor's information memorandum, or who perhaps do not have the time to sit at their computer during the auction process. We do believe that the bond, with its breadth of opportunity, there will be a minimum of 14 loans made to portfolio companies, will be attractive to them. Each participant in the bond should expect a rate of return of over 8% after any fees have been deducted. Each loan entered into by the bond will be for a maximum of 36 months, and if we assume that it takes 6 months to invest the whole of the bond, then a participant in the bond should look to have a final repayment within 3.5 years. The Thin Cats bond will lend to private companies. As they are private, they are inherently less stable or more risky than if you was investing in a publicly quoted company. We do believe that the portfolio approach adopted by the bond, which means a minimum of 14 investments, will reduce that risk. At the same time, each of the loans entered into is secured, and each makes monthly repayments, so in the event of any loss, the amount actually lost should be well reduced. Each of the loans entered into by the bond will have been vetted by the sponsor to the borrower company. So we will rely greatly on the work that has been carried out by the sponsor. Needless to say, however, we will also do our own level of due diligence on top of that, and that will mean meeting with the companies at least once before any loan is entered into, and on occasions thereafter. There are 2 elements to fees within the bond. The first is a 2.5% introductory charge, which covers the cost of all the due diligence undertaken by Invitec. The second charge is that 10% of all interest earned on each loan will be used to cover the costs of monthly reporting. That charge is only levied if the return to participants is 7% or over. We will report on each loan made as and when it is made, and then each participant in the bond will receive a monthly statement. Income tax will be deducted at source from those who it is applicable to deduct from, and they will receive an annual statement of cash deducted. Any future plans will depend upon demand from the borrower companies and the appetite of the private investor to invest in the Thin Cats bonds. We believe from the market research that we have carried out that there is sufficient appetite on both the part of the borrower and of the private investor, and it is our intention to raise a series of bonds, probably on a half-yearly basis. From an Invitec perspective, I am very, very excited because this is at the start of a new alternative asset class, and Invitec is launching the first bond. I'm also excited because it is all part of helping UK PLC by providing funding for the private companies. Finally, I do believe this is a very good investment for the private investor to earn more interest than they currently are earning on their deposit accounts.